If the Islamic Republic of Iran vanished tonight, Iraq would collapse within a week. Borders would blur, militias would clash, and 4 million barrels per day of oil would instantly disappear from global markets. This isn't fiction. Here's exactly what would happen, hour by hour. Hour 1, the world blinks. $130 billion in exports vanish. Crude petroleum shipments stop flowing through the Strait of Hormuz, a choke point controlling 20% of global oil shipments. Flight paths over Iran's airspace grind to a halt. GPS signals flicker as Iran's cyber infrastructure collapses. Iraq is first to reel. Its economy and militias are Iranian lifelines. Trade routes, energy supplies, and proxy networks implode. Asian petrochemical plants halt production. The carpets and saffron Iran exports vanish, hitting luxury markets worldwide. But that's just hour 1. What happens next is far worse. Day 1, global markets crash. Stock exchanges wipe out $100 billion in value. Currency markets spiral as the Iranian rial disappears. Oil prices spike as panic sets in. 4 million barrels per day lost overnight. Communication links falter. Iran's 0.1% share in global internet infrastructure gone. But the ripple disrupts regional connectivity. Supply chains buckle as petrochemical industries in Asia cease operations. Food exports like saffron, pistachios, and dates vanish, sending prices soaring. Lebanon and Syria's fragile economies face immediate shocks. Supply panic spreads beyond the Middle East. And this is where it gets truly terrifying. 1 week, the dominoes fall faster. Global crude shortages hit hard. 1.5% of the world's energy supply is gone. Asian markets tighten as petrochemical supplies dry up. 3% global share lost. Iraq's security collapses without Iranian militia support. Chaos reigns in Baghdad. Yemen's conflict intensifies. Food prices spike sharply. Pistachios vanish from Turkish markets. Saffron disappears from Europe. Shipping insurance premiums skyrocket around the Strait of Hormuz. Neighboring Gulf states scramble defensive postures. The energy crisis deepens. The world faces an unprecedented supply shock. If you think that's bad, wait until you see what happens to Syria. 1 month. A geopolitical vacuum yawns wide. Syria, long dependent on Iranian support, plunges into deeper conflict. Hezbollah in Lebanon weakens, sparking militia infighting. Saudi Arabia and the UAE move aggressively to fill the void, escalating proxy wars. Russia seizes the moment to expand influence. In Syria and Iraq, China scrambles to secure new energy routes, investing heavily in alternative pipelines, bypassing the Strait of Hormuz. Global crude prices stabilize, but at double pre-crisis levels. The regional power balance shifts dangerously. The absence of Iran's cyber and asymmetric warfare capabilities creates unpredictable new threats. But the world's worst nightmares are yet to unfold. 6 months. New alliances form amid fractured chaos. The US and Gulf states consolidate military presence in the region. India and China accelerate investments in Central Asian gas fields, replacing Iran's 10 BCM exports. Turkey benefits from increased trade, but faces refugee surges from destabilized neighbors. Iraq remains a volatile battleground. Kurdish factions gain ground. Global petrochemical markets reroute, but at massive cost and inefficiency. Food markets adjust. Saffron and pistachios replaced, but only partially. The loss of Iran's cyber power leaves regional networks vulnerable. The world adapts, but the price is staggering, and the aftershocks ripple far beyond the Middle East. 1 year later, the global order rearranges itself. Iran's $0.33 trillion GDP absence dents 0.35% of world GDP, but the regional economic void is seismic. Saudi Arabia emerges as dominant power in the Gulf, while Russia and China deepen Middle East ties. Oil prices remain volatile, permanently higher. Iraq struggles to rebuild, but remains fragile. The petrochemical sector shifts to Southeast Asia slowly. The world loses a key energy and strategic player forever. Proxy conflicts persist, fueling instability. The permanent erosion of trust in maritime choke points drives the new global trade routes. A new era begins, shaped by loss and adaptation. 5 years on, the long-term reality sets in. Iran's unique cultural exports, saffron, Persian carpets, and dates, are partially replaced but never fully restored. The world's second-largest natural gas reserves remain untapped, restructuring global energy geopolitics. Middle Eastern conflict zones remain volatile without Iranian proxy influence, but grow unpredictable. Cybersecurity landscapes have shifted irrevocably. Iran's sophisticated cyber capabilities gone, but their absence opens new vulnerabilities. The global economy has adjusted, but the shadow of Iran's disappearance lingers. Some things lost can never be recovered. Let's look at the final impact scorecard. Trade, 610. Energy, 810. Geopolitics, 910. Finance, 510. Tech, 610. Food, 310. Military, 810. Cultural, 410. Overall, 7.1210. Devastating. Would the world recover? Yes, but slowly and painfully. The global energy market would stabilize only after massive investments and geopolitical shifts. Iraq's collapse would take years to mend. The one thing the world could never replace: Iran's strategic control of the Strait of Hormuz. Its disappearance leaves a permanent scar on global trade routes, security balances, and cultural heritage. If you made it this far, you understand how connected our world really is. Subscribe next week. What if North Korea vanished?